Everybody, Brian here from quantlabs.net. I just wanted to go over with you. Last few days have been what we call this word right here. Here's the definition of it: disastrously mishandled situation or undertaking. This is the best I can get to what I'm about to show you. This is not easy, very difficult to do. I am going to take you to my Quant Labs channel on YouTube, and I'm going to show you where to start, where this all starts from. Okay, we have a video here called Using Fibonacci Retracement Level for Price Target Moves for Support or Resistance. So we're trying to continue that using basically trend lines. So trying to get it is basically this, and it's a disastrously mishandled situation or undertaking. Another way of saying that, but I ain't going to do it in I'm going to keep it clean. All right, so the first thing I want you to understand here in this video is how I was able to try to use pivots, signals of peaks and troughs in a price line. So trying to determine trends out of that is very, very difficult. To try to do it in a systematic way, I'm just going to go right into it. So here we have three different periods I'm trying to do this for. So we have 90 days, 45, or 30 days. So here's some of the cryptocurrency pairs that I have generated. And basically, I've kept it to a minimum because, as you know, we have over 300 pairs. What you'll also notice here is it's kept with the one-day chart because it seems to work best for that. Useless on the monthly, and I'm not sure, it's probably a different methodology to do it with hourly data. So we're just working with daily data. So I'm going to show you the 30-day. So what we're trying to do here is not a good example. Okay, so this is somewhat an okay example. So what we have here is we have what you probably look at it as a wedge. So let me just blow this up. So we're looking at whatever the currency is, iOS, BTC, and this is for the last 30 days. But the data is fairly old, probably a week old or so. So what we have here is we have a formation of a wedge. So what we can tell from here, here's the price, here's some data. I'm going to tell you what this is. And what we have here is we have two trend lines, an upper and a lower one, or theoretically. So the first one here, this what appears to be an upper trend line, what it does is trying to take the maximums of point of contacts of this line. So we got 1, 2, and the third one is the expected price. So theoretically what this means is if we have a maximum and it's all generated by the signals that I've shown you in that previous Fibonacci video, I mean, it doesn't appear that way in this chart, but using the library that I'm using in Python, this is basically what it generates. And I've tried to experiment at 100 different ways and 100 different parameters, but what may work for one chart may not work for another cryptocurrency pair, and then you muddle around, and it gets to a point where you can be basically working with the best with what you can get. So in this case, this is what I have based upon what I've worked with for the last couple of days. So theoretically, what we're doing here is we're trying to take 2 points of peaks, I guess you could call them. And then what we expect is the price will eventually come back up, and if it did, it would break trend. So that means if it does break trend on the third touch, 1, 2, 3, or whatever that point is, it can be a signal of a confirmed breakthrough. And the reason it's done in threes is because if you have a whale trader, and remember this is daily data, they could be testing the market, trying to shake out as many weak players as possible. So if we have a bunch of algorithms or a bunch of traders waiting on the signal for this to bounce, it may not. So what will happen is the whale trader or whale traders will then push, if they can, will try to push the price back down to a point, and then it will come back up over a couple of days, and then they'll push it back down again to weaken out, to consolidate, and to squeeze out as many weak players as possible, and then it will drive the price up. And usually when it hits either this historical high or this historical high, what will happen is the price will then rise up, and people will catch on to that trend, and then will pile in to drive up price. So that's usually what happens in waves of three contacts. So you can see here, we also have this so-called downtrend as well, and these are supposed to be the troughs of that price line over the last, I think it's 30 days we're working with here. Yes, so this is over the last 30 days. So again, I'm sure somewhere along here we can probably find a weak point, and because that, if depending upon the exchange, this is Binance, so you can't short it, but you could theoretically on the third touch short and make the price be driven down, because if this currency can be manipulated by large whale traders, yes, the price will go down. That's the theory, and I'm now imagine me saying theory. So in here, what you'll find is there is roughly, I don't know how many exactly there are, but there's, let's say, 15. So let me show you if you need to know. So if I go to chart Binance, trend 30, 30, I think. Oh, okay, great. So if I did a word count on that, we have 21 files for the 30-day. If I went and did the 45-day, let's see what that is. 45, no, trend 40, 45. So I'll do the word count there. 45, it's 21 days still. No, not in the right. So, Binance trend, 45-day. No, okay. So let me just do a quick fix here. Do that. Sorry to keep you watching online stupidity in a live video. Okay. So we just did, that's a 30-day. So if I did a Binance trend on the 45, there we go. Okay, so let's see how many files we got generated. So it's 23 for the 45, and then for the 90-day, we have 15 files. So what I can show you is I can do any time period I want, or what I call the look back. So this period looks back 30 days. This one for the 45 looks back 45 days, and so on, and looks back 90 days. So if I show you just a few of these charts here, this one's no good because you can clearly see, to me, there's just no trend. I couldn't work with that. This one, again, I could see possibly 1, 2, and then 1, and then maybe 2. So if this was to say your downtrend, this one right here, we can see we have 1, 2, maybe 3, and then it crosses down the price. And then here on the upper, We're not getting that, but if we did 1, 2, and then we would expect the price to get driven up through the upper trend. Now, I want you to understand that you can use these when it does cross. In this case here, that this could be considered a resistance line, and then depending upon the price and the target when you decide when to get in, obviously this could be a shorting opportunity. So you could use this either as a support or resistance line, and then you could also apply, as I said in the previous video, a new set of Fibonacci levels to track new entries. So that's a combination of that. So what I'm saying is you can use both the trend lines for either of these two, up or lower, as a way to set pricing target levels if the price does cross these trends. Or we can also use Fibonacci levels, and what I'm about to also show you down the line is moving averages. So we're dealing again with a 20 simple day, 50-day simple day, and 200 simple day. So just keep that in mind. So in this case, if our price did cross the trend on the lower trend, it may be quite possibly a entry, combined with if their momentum's on your right side as well. So I'm going to just show you some other ones I'm just trying to look for here. Again, that's no good. So what we're looking at is, so we have a clear trend line here, or sorry, downtrend, and I think if I was to count the number of touches here, it's well over 3. So I got maybe 1, 2, 3, 4. It went down, yeah, it's not a perfect science. It's not supposed to be. Here's a wedge. So in this case, we have 1, 2, or at least here. So you can swap these out. It depends. And oh, before I forget, I want to highlight this text here. So what we have here is we have the 3 trends and the last 3 down. So as I said, what we've got is the idea here is, mathematically speaking, I'm able to track these price points here, these two, in this look back of 30 days, that the uptrend, whichever one of these are, there were the peaks of them. The first 2 peaks were these two right here, 6.3 and 6.3, and then 6.36. And then it's expected, based upon the regression line, which these really are, the next target on the third touch for it to be potentially an entry or an exit is 5.93. And same on the downside is 6.3, 6.366, and 5.933 as well. Now, this is the funny part about this whole mixed up cluster F business, is if you try to correct this and you try to run it against other charts using the same methodology, you're going to get something totally different. And usually these trend lines amounts can be the same, because there's the signal points of the peaks and the troughs are so tight that they end up being the same. At the same time, it doesn't really matter, because we're going to be overlaying with other indicators to determine which direction the price is going. And then we can use either one of these lines, one of these trend lines, as just a confirmation to say, yes, historically, we've had 2 points where that price did cross this regression line. Here's a third price we expect the price to cross at. And that's all you're really using. So you want to keep your eyes on this number when the price is expected to break through that target level. So if I continue going through these, you probably can see 1, 2, okay, 1, 2, 3. The price has stayed higher than this line. In this case, there may be 2 points here. And then if the price did come back up, we'd expect that to be a new resistance line, supposedly. And again, we have the numbers here to confirm all that. So let me just check out some other ones here. Here's another wedge that gets generated. So you can see here that the price did break through, but funny enough is will the price come back, and should we continue should we continue to watch this, and will the price maybe come back twice more or two more times before it could potentially break through if momentum does take hold on this particular currency. So let me just see some other ones here. Again, it's a combination, so many combinations. It's really hard to show. Okay, so let me just show you a 45. What I want to do is I want to just compare a couple of them with each other. So the iOS 1, 2. So maybe if the price does come back, we can expect it to potentially break out. Again, you can use that as an entry. This is a 45-day chart or 45-day look back. Also, this line's pretty well useless, but we have here 1, 2 points. So if the price continues falling, then that just confirms that it's. I mean, that's a free fall. Who knows? But that, I mean, if you had a position on, historically, the level might be parallel to here. That might be an example where you might want to get out to keep your profit. Just as an example. Here's another one. Now, this is an interesting situation where I have verified the data, and if the points are too tight, you'll just get a flat line like here. So we have 1, 2, 3. So the price did fall below that trend. And then again, we have this other one, 1, 2. So if the price falls below this trend, then maybe we can expect it to not go below that. Who knows? Again, we're just using these lines as a confirmation. So here's another one. This one's an interesting one. This could be considered somewhat a flag. It did break through. So 1, 2, 3, and it broke through, and it's been below that. So there's some validity to this. But we also have 1, 2, but the price did not break through, and therefore if it did, and it did come back right at this point, we know that we have a breakout on our hands. That's, again, theoretically. So here we can see that this kind of works with these channels, and it just depends upon the formation of the line. But you can kind of use these as a way to track the pricing and historical trends of an upper and a lower trend. This one, again, let me just pull up a 90-day chart now. So there is some theoretical, when it works, it seems to work pretty good. So here we have a 1, 2. So the question is, does it fall below here and bounce off this line? That's one theory. Here we have another one. We go 1 multiple times along here, and if the price started to move up, we can say maybe that could be a breakout because we've already got 1, 2, multiple 3 times here, and that could be a potential breakout. So the idea here is used to use targets as your pricing action for both your entry and exit, depending upon your historical, and you're combining it with the Fibonacci levels as well as the moving averages as well. So I'm just going to pull up a couple more here. Okay, let me just go through every one on the 30-day. So here we have 1, 2, not quite there, 3rd, 4th. So 1, 2, 3. Who knows? But we also have and every couple of days we're going to rerun this and update it. So these lines, these trend lines will change based upon historical. But this we can use for a way to gauge what we can say about the markets. Here, let me just see here. We got 1, 2, 3. So that broke through on the third point. We got 1, 2, 3. So up here we have 1, 2. So here's a good example. So this is ADA, and this is quite interesting. So if the price continues, which it did fall below, this is definitely not a good thing for this price line, because again we have 1, 2, and then 3. It broke through. So then we have 1, 2, and if it breaks through, continuing with these same trends, and the price did break through, then that can be a classic entry for a classic breakout. So let me just pull up ADA if we have it. ADA USD T. So let's check out the 45-day. So you can see here that we have 1, 2, 3 touched it, but it didn't fall. But this one it did. But yet on the 30-day, let's see what we got here. So here on the 30-day, we got 1, 2, 3. So the 45, which is this one, doesn't appear to be 100% valid, but we have 1, 2, 3. So it did fall through, and it came back, and it fell through again. So something of interest to use as a potential, but in this case, what do we have? Go 1, 2, 3. So I'm just trying to test out what maybe 30-day period might be a good enough to watch on the trend. So we got 1, 2, 3. So 30-day. So maybe a 30-day might be good enough to watch on the trends as well as the 90-day. Let me just see what else we have here. No, I can't work with that. Can't work with that. Again, these are the trends. Are just there's nothing there. There's no volatility. There's no movement, and it just throws them off. Here's an interesting one. So again, we have our 1, but it breached it twice. So this time it's gone through. Who knows? So that's the 30-day BTS. So let me see what we have. So there's no BTS there, and no BTS as well. Okay. So BTS. So I think the 30-day may be interesting. So we have 1, 2, 3. Boom, it goes down. Then we have 1. So I guess what you could say is if the price falls and then breaks through the upper trend, that's a tough one. Let me just check out some of the other periods if we have it. CMTC. No, we don't have that either. CND. So we're just going through the 30-day. So again, that doesn't mean a lot. I mean, we have multiple times it hits here. Which is 1, 2, 3. And then, yeah. So again, it I don't know if that would count as well. That's a tough one to gauge. But iOS, here's another wedge. So we got 1, 2. And again, it's never perfect, but 3 is the rule of thumb usually. So we got 1 on the and 2. So if this price starts to come back and the trend holds, and if it breaks here, then that would be a potential entry. Again, depending upon momentum. Oh, one big thing I better mention, you don't have so many here is because I only list generate charts for those currency pairs that generate over 45 million on the last trading day. Or sorry, I think it's the last 50 million. That's why these number of charts are not so high as well. Just want to make sure I mention that. So here we have 1, 2, well, I don't know, it's tough to say, 1, 2, 3. So some validity there. Again, who knows? Okay, so 1, 2. So we got 1, 2, 3, and 4. Tough to say. So we got 1, 1. So again, 1. I guess I count that as a second. So if this breaks through, but that's a tough one to gauge too. So 1. I don't know if you count that. So here somehow on the third one, there might be some validity there. So the price would drop as it should. So you got 1, 2. That's definitely not a minimum because it has to bounce off it. So that one again is tough to say, but this is definitely a wedge of some kind. So it just broke through the lower part. So what I would expect as the price may come back, it will, based upon as I said, those whale trades, it may basically mean that this will shake out some of the weaker players and break out if this price does break through this upper line. Things like that. So I would definitely put that as a potential. Let me just compare the other periods. If we have, that's TNB BTC. No chart for that. TNBC, let's see the 90-day. So again, we've got multiple bounces. See, again, I'm always thinking maybe the 30 days is all we need to look at. Again, I can't make heads or tails out of that. TRX, so 1, 2, no, definitely not. 1, 2. So I guess we could say, got 1, 2. So if this price breaks through, then we have a potential breakout. I'm going to guess. So what's that one? TRX Ethereum. So that's what it looked like on the 90, but see, it's continuing to just go down. So you can see how this is very hard to gauge some sort of consistency or pattern to it. It's just tough to do. This is what makes trading very difficult, or at least systematic trading. So we have a few here, but nothing of significance. So you're here. Let me just start at XL. So here's an interesting one. So it bounces off that. This may bounce off that one and then break through. I don't know, but that is a possibility. We got 1, 2, 3. So if that price does break through, let's see if there's a 90-day chart for that. XLM. No, nothing for that. Okay. One, oh, I got a couple, I got two more. So this is XVG. Again, very difficult to be able to gauge anything out of that one. So one, cross through there, cross through here. Could this be considered one? I'm not sure. I guess the way to interpret this one is if the price comes back and we hold on to this upper trend, we can consider that an entry. But again, we have other factors to consider, other indicators. Okay, there you go. A great classic example of what this word means. It's brutal out there. Stay strong. And I'm going to try to build a systematic way to be able to determine some of these lines. Not all of them, obviously, but some of them. And wish me luck. We shall talk to you later, and over and out.